If HMRC thinks you owe tax, the letter usually fines you. Funny how that works. The envelope lands on the mat, the figure is printed, the deadline is there, and you're expected to understand it quickly enough to pay on time. But when a pensioner may be entitled to help, the explanation often seems to arrive in pieces. A line on a website, a form nobody mentioned, a letter that uses 6 polite words when 2 plain ones would have done the job. DWP may know your age, HMRC may know your pension income. Somewhere in the system there may be records about your state pension, your tax code, your national insurance years, your benefits, your savings interest, your winter payment, and sometimes even enough information to make a very good guess that you should check something. And yet, far too often, the pensioner is still left sitting at the kitchen table thinking, was I supposed to know that? That is the part people are angry about, and I understand it. Because this is not about grabbing money. It is not about pretending every pensioner qualifies for everything. That would be nonsense, and expensive nonsense at that. This is about something simpler. If the system has enough information to chase a pensioner when money is owed, why does it so often leave that same pensioner to hunt for help when money might be available? If you are new here, I'm Paulo. On this channel, we talk about UK pensions, DWP, HMRC, household money, old British money habits, and the small rules that can quietly change retirement. I often bring up the old habits, but not because the past was easy. It wasn't. Some people had cold rooms, thin purses, and a talent for making 1 tin of something last longer than nature intended. Still, money used to show itself more clearly. A rent book was opened, a post office book was stamped, a bill sat on the table. Coins moved from one hand to another. If the change felt light, someone noticed. If the number looked wrong, it could be questioned before it disappeared into a system. In 2026, the money has not vanished. The explanation often has. Today, I want to look at the DWP and HMRC checks that pensioners should not have to find alone but still need to check. And the first one is the one many people dismiss before the rules have even had a chance to look at their numbers. Let's start with pension credit, because this is where a lot of damage begins before any official decision has been made. A pensioner hears the words pension credit and makes a private judgment. I own my home. I have a little put away. There are people worse off than me. I probably won't qualify. That last sentence is dangerous. It sounds modest. It sounds decent. In many homes, it probably sounds exactly like the sort of thing a parent would have said while folding a bill and putting it under a sugar tin. But pension credit is not decided by whether a person feels deserving. It is decided by rules. For 2026 to 2027, gov.uk says pension credit can top up weekly income to £238 if you're single, or £363 and 25 pence if you have a partner. Some people can get more if they have certain extra costs or responsibilities. Now, before anyone at home shouts at the screen, yes, income matters. Savings can matter too. Circumstances matter. That is why this is a check, not a promise. But here's the thing too many people get wrong. Owning your home does not automatically close the door. Having some savings does not automatically close the door. A small private pension does not automatically close the door either. The door might close after the calculation. Fine. At least then it was the rule that said no, not a tired guess made at the table. And pension credit can matter beyond the weekly top-up. It may open the way to other support depending on circumstances. Council tax help, housing support if you rent, cold weather payments in England, Wales and Northern Ireland if conditions are met, a free TV license for some people aged 75 or over, help with NHS costs. This is why I get irritated on behalf of people. The name sounds like one small benefit. In real life, it can be a key, and plenty of pensioners never even try the key because they have already decided the lock is not for them, so the first check is plain. If you are over state pension age and your income is anywhere near those figures, check pension credit properly. Use gov.uk if you're comfortable online. If not, phone the pension credit claim line or ask Citizens Advice, Age UK, or someone you trust to sit beside you. Beside you, by the way, not over you. There is a difference. You are not handing over your life. You're getting another pair of eyes on a rule that should have been explained in plain English in the first place. The second check is attendance allowance, and this one makes people hesitate for a different reason. Pension credit often gets dismissed because people think they are not poor enough. Attendance allowance gets missed because people do not like admitting what daily life has become. They say, I manage. And they do. Sort of. They manage by not going upstairs unless they have to. They manage by skipping the bath when they feel unsteady. They manage by leaning on the worktop longer than they tell their daughter. They manage by planning the day around pain, breathlessness, poor balance, confusion, bad eyesight, or a body that has started negotiating every movement like a difficult tradesman. Gov.uk says attendance allowance is for people who are state pension age or older and need help with personal support because of a disability, health condition, or mental health condition. It does not cover mobility needs, which is important. For 2026 to 2027, the rates are £76.70 a week at the lower rate, or £114.60 a week at the higher rate, depending on the level of help or supervision needed. The form is where many people stop. One comment I saw on a video about this said, the attendance allowance form is long enough to put people off before they begin. And that is exactly the problem. A person who is already tired, ill, or proud in the old-fashioned way is then asked to describe the worst parts of their day on paper. Nobody enjoys that. But the form is not asking whether you are brave. It is asking what help you reasonably need, even if you do not currently get that help. That distinction matters. A person living alone may still need supervision. A person who refuses help may still need help. A person who has built little tricks around the house to avoid admitting the problem may still be eligible. Now, attendance allowance is not for everyone. If you already get certain disability benefits, such as PIP, DLA, or adult disability payment, the rules can be different. This is why the check matters. But I would not want someone with COPD, a heart condition, poor balance, dementia symptoms, or serious daily difficulty to lose out just because the form looked unfriendly. And this is where I want to pause for a second. People say pensioners miss help because they do not bother. I do not think that is fair. Many miss help because the process looks exhausting. Before page 2. That brings us to winter help, which is where the rules have been changing enough to make old memories unreliable. A lot of pensioners remember winter fuel payment as something that arrived more or less automatically. For many, it still may, but recent changes have made it more important to check what applies now, not what applied 5 years ago over a cup of tea. For winter 2026 to 2027, gov.uk says you could get winter fuel payment if you were born on or before June 27, 1960. The amount can be between £100 and £300, depending on age, household situation, and whether you receive certain benefits. Most people who qualify are expected to be paid automatically, usually in November or December. Gov.uk also says eligible people should normally receive a letter telling them how much they will get. That letter matters. If you think you're eligible and no letter arrives, do not simply assume the system has made the right decision. Check whether you need to claim. There's also the warm home discount, which is different. That is a £150 discount on the electricity bill for eligible households. The scheme is due to reopen in October 2026, and many people receive it automatically, though Scotland can work differently for some groups. Then there are cold weather payments in England, Wales, and Northern Ireland linked to very cold weather and certain benefits. Pension credit can be one of those qualifying benefits, so you can see how one missed check can lean into another. This is what should be clearer. A pensioner should not need a rainy afternoon, a strong pair of glasses, and the emotional patience of a saint to work out which winter support is which. Winter fuel payment is one thing, warm home discount is another, cold weather payment is another again, and if a person lives in Scotland, some support works under different arrangements. That is not ordinary household language. That is a filing cabinet wearing a scarf. So the third check is this. Before winter, check whether you are due winter fuel payment. Check whether you should receive warm home discount. And if you are on pension credit or think you might be, check what that could open for cold weather support too. Do it before the heating bill has already made the decision for you, because winter does not wait politely while people try to understand government wording. Now we come to HMRC. This is the part people often dislike because HMRC letters have a special talent. They make a person feel guilty before the envelope is even open, but not every HMRC letter means you have done something wrong. Sometimes it means the numbers have crossed a line. For 2026 to 2027, the full new state pension is £241.30 a week. That is £12,547.60 a year. The standard personal allowance is £12,570. You see the problem. The full new state pension sits just under the personal allowance. Add a small private pension, workplace pension, savings interest, or part-time work, and some pensioners may find themselves in tax territory without feeling even slightly wealthy. That is the bit that annoys people, and I think reasonably so. Nobody has to become rich for HMRC to become interested. They just need a bit of income on top of the state pension. The state pension is taxable, but tax is not usually taken off it before it is paid. HMRC may collect tax through a tax code on another income, or in some cases through a simple assessment letter. If you receive a simple assessment letter before October 31st, 2026 for the 2025 to 2026 tax year, gov.uk says you must usually pay by January 31st, 2027. If the letter arrives on or after October 31st, 2026, the deadline is normally 3 months from the date of the letter. Now listen carefully here. Do not ignore the letter because it looks frightening, but do not worship it either. Check the figures, check the tax year, check whether HMRC has used the right pension income. If something looks wrong, contact HMRC. If you cannot make sense of it, ask for help from someone who deals with tax or a trusted advice service. This is the part I wish more people understood. HMRC can be right and still unclear. A letter can be official and still need checking. And if the government expects pensioners to pay on time, it should explain the bill in a way a normal person can understand before the kettle goes cold. The fourth check is simple enough to say, though not always simple to do. Open the HMRC letter, read the date, compare the figures with what you actually received, then act before the deadline turns confusion into a penalty or a panic. Part 6. The fifth check is your state pension record, and this one reaches two groups. First, people who have not yet reached state pension age. Second, people already receiving state pension who still have that small uneasy feeling that the number might not be right. Gov.uk says the new state pension depends on your national insurance record. People usually need at least 10 qualifying years to receive any new state pension and 35 qualifying years for the full amount if their record starts after April 2016. If your record began before then, things can be more complicated, especially if you were contracted out. That phrase, contracted out on has confused enough households to deserve its own chair at the table. The important point is this: do not guess. Check your state pension forecast. Check your national insurance record. If there are gaps, find out whether filling them would actually increase your state pension before paying voluntary contributions. That last bit matters. Paying for missing years is not automatically the right move for everyone. In some cases it helps. In others, it may change nothing. There have also been cases where people missed state pension money because old records were incomplete or credits were not properly counted. Some of these issues affected people who had caring responsibilities years ago. DWP and HMRC have been reviewing certain cases, but I would not build my retirement peace of mind on they will probably find me. So let's bring the whole thing back to the kitchen table. DWP and HMRC know a lot. They know enough to send letters, adjust tax codes, calculate pensions, record benefits, and set deadlines. Yet many pensioners still have to discover the useful checks through neighbors, daughters, advice charities, newspaper columns, or videos like this one. That is not good enough. But until the system becomes clearer, the old habit still helps. Make the number visible. Pension credit, attendance allowance, winter support, HMRC tax letters, state pension records, one at a time. No grand performance, no panic. Just do not let the first answer be the one you invented because the form looked too tiring. If this video helped, consider subscribing. On this channel, we take UK pensions, DWP, HMRC, and ordinary household money and try to turn them back into something people can actually understand. Before you go, I want to ask you something. Have you ever found out too late about a benefit, a tax letter, a pension rule, or a payment you should have checked earlier? And where in the UK are you watching from? England, Scotland, Wales, Northern Ireland, a city, a village, the coast, an old mining town, London, Yorkshire, Glasgow, Cardiff, Belfast, anywhere at all. Your comments help shape the next videos, because the official rules tell us one thing, but real pensioners tell us what those rules feel like at home. Until next time, take care of yourself. Open the letter, check the number, and do not let the system stay quiet when your money is involved.